All right, I hope you can see my screen. So, you're welcome once more to this mentorship program. And we are going to take everything all over. We're going to take everything all over. So, I think, but I'm not, when I say all over, I'm not talking about the SMC part. We just touch a little of SMC because we know the mostly what we are going to take from SMC is just this pattern. We have the sweep, break of structure, price comes back, forms liquidity. So it comes back, taps here and sells. I don't know, it's not that clear. Okay. We have something like this. I know if we have been trading SMC, we mostly have this pattern. We are mostly familiar with this pattern, and that's for a sell or for a buy. We have price always comes, sweep this low, makes this low protected, break structure, comes back, forms liquidity, go up, come back here at this QMR taps here. So we always know this is our QMR zone where price is going to come back to this QMR before buying. Then here's our liquidity, structural liquidity or whatever you want to call it. So the same thing here. This high is protected while this low is protected because of this sweep. You understand? So that's just our basic algo market structure is in SMC. And we also know when the market is bullish, for instance, like this, we always wait for price to come to 50%, then we have a move to the upside. So we want to really focus on this. Our main stuff, because all this is just basic things which you should not really put your focus on. Our main stuff should be able to understand the Malaysian support and resistance. You understand? Our main stuff should be able for us to understand the Malaysian support and resistance. And we know there are some basic types of support and resistance we always use whenever we're looking for a trade. And I think if you've watched the videos, you would have seen them. We have we have the A shapes and the V shapes types of support and resistance. We have the open close and we have the QMR, I think, yes. Then we have the flip zones, SNR. So if we are to take it again, what are we going to say? We're going to say we have something like this. We have something like this. This is going to be a bullish candle and this is going to be a bearish candle. So this is going to be an A-shaped SNR, an A-shaped SNR, which always gives us a formation like this on the line chart. I'm also going to have a V-shaped SNR, which is something like this. On the line chart, a V-shaped SNR. And again, we are going to have, this is one type of SNR. Then we also have our QMR, which is something like this. We often call it a head and shoulder pattern. So it should be something like this. Price shifts to the upside, breaks this one, breaks structure down, comes back to the zone, and we have a sell to the downside. They will also have these two. So this is all what you are supposed to be looking out for. Nothing more, nothing less. You understand? You have to make trading very, very easy for you. You don't need to stress yourself. So we have a break of structure to the upside, then price comes back. This is a Quasimodo reversal. That's why it's called the QMR. Then we also have this type of SNR, the flipped SNR, which we have like, for instance, price goes up. This was this A-shaped SNR. This here is an A-shaped SNR. So what the way is we expect price to come to this A-shape, taps here, and we have a sell. But what happens when price doesn't respect that? What happens when price comes and break this SNR to the upside? And now we expect price to come back to this SNR. It's similar to a breaker block. You understand? We expect price to come back to this SNR, tap here, and we have a buy to the upside. Same thing, opposite here, we have something like this. Breaks, comes back, tap, and we have to sell to the downside. So those are the types of SNR, the type of support and resistance we have, and we have the last one, which is the OCL. That is the open and close level. We have it like this. So it's often created by two candlesticks going to the same direction. Let's say if this is a bearish candlestick, the next is going to be a bearish candlestick too at the same point, going to the same direction. That's this for a bearish. Yes, for a bullish. Yes, for a bullish. All right. So now, here is your open and close. Here's your open and close. We call these open and close levels where price will likely react from them. So all these are zones where price will likely react from. So from here, we know price may likely come back, taps at this key level, this support key level, bounce to the upside. Price may come to this resistance key level here, comes back here, bounce with downside. Price may comes back to this one haven't played out. We just have something. We have one, two, the left shoulder and the head. So we expect the right shoulder to come tap here and play out. Same thing here. These two, this haven't played out. Price breaks, comes back, taps, and go. Here we expect something similar to that, which is all this is in the PDFs I've provided in the channel, in the group. We have to expect price to come back, tap here, and go down. So that's just how it's everything here is provided in the channel, is provided in this PDFs I sent. So for instance, let's say on this trade I'm holding, what was my confirmation? I think if you see here on this 1 hour time frame, I wrote everything here. I think this is on GU, yes. I'm holding this straight on GU. I think you see I have something here like a daily QMR. Then I refine it to my H4 refinement. Here's my H4 refinement. Then I refine it to this H1 level here. That was my entry. You understand? So let me show you how I got this one. Before we go to before we show you how all these stuffs I just said, all these levels work. So I think we had something like this. Turn on your line chart, you're going to see this is QMR. Can you see this is QMR level? Price came back to this QMR tap here. We're expecting price to come back, tap here, and we have to sell to the downside. So price actually came to that level tap. So I just refined it. I didn't do a storyline, no storyline. So you use storyline just to have your direction. For those who are always confused, we use storylines to find your direction. So you don't have your storyline for your trades. If you see a trade, you can take it without a storyline. But to be on the safe side, you can use your storyline. So I took this without a storyline. So this was my H4 refinement here. Turn on your line chart, you're going to see it clearly. H4 refinement. And what do I do? I go down, down again to 1 hour time frame to refine. 1 hour time frame, I saw this A-shape level. You can see this A-shape level. That was my level. I was anticipating price to come back, tap, and move suddenly into the downside. So now let's see how all these symbols I showed you guys here, how it works, all these A shapes and V shape stuff. So we know our basic SNR, what we call classic SNR, is something like this, an A shape, which stands for a resistance. I have a V shape, which stands for a support. So this is a classic SNR or a basic SNR. So now, price always tend to use these zones as like turning points. You can understand price always uses points as these ones as turning points in the market. For instance, here we have an A shape, here we have an A shape, here we have a V shape. So if you look really closely, price always uses points as always use your line chart always use your line chart. Don't forget to use your line chart to see it clear to spot those V shape zones. Because if you don't use your line chart, you're going to be confused. So price always use these zones as reversal points. For instance, this V shape, this A shape here. Let me see if price came back. No, price didn't come back there. We have this other V shape. This an A shape, sorry, this an A shape. Let's see if price used it. Price never came back there. Sorry. Which group okay for example? Let's see, this is a QMR here. A QMR level. See, price never came back to this QMR. Let's see another one. Let's check. Let's check. Price didn't come to any of these ones. Let's see. Here's an open close on the daily time frame. Here's an open close. Price came back to this open close, tested the open close and went up. Then we have this A shape. Yeah. Price actually came back to the A shape, tapped, and we had to sell to the downside. Let's see. We have this QMR level. Here's a QMR where we have price broke structure. Here's a break of structure here to the downside. Then Yes, at QMR level. We were expecting price to reverse to price came back to its QMR level and we had to sell. That was a clean one. Then here we have a V shape. Here's a V shape key level. What happened? Price came back to this V shape level. Tap here. We had to move to the upside. Can you see how it works? Let's see another. V shape also here. We have a V shape here. If you tap at this angle, I told you guys always use this magnet so you can magnet those levels for you. So we had price come back with this weak tap. We had to move to the upside. Let's see more. Let's see more. Let's see more of open close to let's see more of open close. Let's not neglect open close levels. Those are very important. We have this open close level. So we have this open close level. Price came back, tapped there. We had to move to the downside. So that's how this levels works. Here's another one. That's how this key level works. That's how the key level works. But to understand this one is no big deal. You just know these are turning points in the market. And now how to use it, that's where the problem begins. You get how to use it, that's where the problem begins, and how to spot a storyline. Once you're able to once you're able to spot a storyline, to begin a storyline, that's where all your problems in this trading stuff disappears. Get that's where you become automatically free. So now let's take it slowly. Whenever we have a key level on the higher time frame, let's say for instance the daily, weekly, or monthly, those are good time frames for directions, spot our directions. For instance, let's say price gave us something like this, an A-shaped key level. You get, let's say price gives us an A-shaped key level. What do you want to do? You want to mark out that key level. That means that sharp edge, that apex, you want to mark it out with a line on that higher time frame. Okay, you want to mark that key level on that higher time frame. And what do you expect again? Once has been marked out, you want to wait for price to come to this zone back on that same higher time frame. You understand? Most of the time, excuse me. So most of the time, you always come when it has already happened. You will not see when it's still about to happen. You always see when it has already happened. So what are you expecting at this level? You want price to come back to this level, tap that level and close below. For instance, price comes to this level, tap with a wick. That means price comes taps into this level, this key level, this A-shaped key level on a higher time frame. For instance, on a daily or on a weekly time frame. So expect price to come tap into this key level and close below. You can see this candlestick close below the key level. You understand? But it's not a must, right? It's not a must. Sometimes it may close above the key level here. You just look for your storyline, and if it's confirmed, you continue your sell to the downside. Are you getting? You can still wait for you. It may close above. It may close exactly at the key level. It may close, but the best for teaching purposes, it should close below the key level. It should close below your key level. Once it has closed below your key level on that daily time frame which you are on, or on the weekly time frame which you are on, you want to go one time frame or two time frame lower. You want to go one time frame or two time frame lower. One time frame or two time frame lower. You want to see something like this, a sweep, a break of structure. You want to see this on the lower time frame. And what else? You expect price to come back to this zone on one or two time frame lower. That means on one or two time frame lower, you're looking for a break of structure. Before this touch, this is a break of structure here. Then now what are you expecting? You're expecting price to return to this level, and we have a sell to the downside. Can you see we have a sell to the downside? This just all about everything in it. So you have a sweep making this high protected, price comes back, sweeps liquidity. If you have liquidity to your own advantage, your price comes back, taps, and we have a sell to the downside. That's just all what you need. That's just all what you need. It's not that complicated. Let's see on Euro USD. I think this should be on this trade. This buy I'm anticipating here. I think let me check 15 minutes. I didn't place my stop loss the right way. Don't know. But let's see what's happening. Price have actually taken me out, but it's still a good trade. Enter if you can enter, you enter. If it's confirmed. So I'm not telling you to enter if it's confirmed by you, you enter because it can still continue going down soon. I haven't checked CPO and all those stuff. I don't know my trading view on the other on this side. My trading view here had an issue, so you had to restart. Everything had to restart. So I couldn't really launch my CPO and all those things to check if it was actually valid. If it was valid, I could take that trade. If I confirmed it, I could take the trade, but I haven't confirmed yet. I have to set my view up and footprint chart and everything before I can be able to really analyze if it's a good trade or not. So with that aside, that's not what we're doing. So now, how did I got this entry, this first entry? You understand? How did I have this first entry? Simple. What am I looking for? Higher time frame. Higher time frame. That means if you start your storyline on a higher time frame, you have far, very, very much probability to win. Let me use um forex.com. This is forex.com. Forex.com. Okay, let's take this all off. So now this is the daily time frame. This was here. This is the daily time frame, and we notice what's happening. Price is bullish. Price broke structure here. Price break this other structure here. Let's take this off. You just need to make everything look simple. Make it simple. Make it simple. Don't complicate it. You understand? We have a break of structure here to the upside, and we have another break of structure here to the upside. You understand? Systematically, price is bullish. But me, I always use my BBMA. I think I showed you guys how I use my BBMA already. I always use my BBMA to let me see weekly to confirm better. I expect price to see come back down here for me to have a clean entry. Price will come back down. But now there's no key level. Oh, if price is coming down here, it's going to give me something at this point. It's going to give me an entry at this point to buy. And it's going to be a massive buy if I'm buying from it. So if this the present trade here, if it doesn't hold, I will expect price to come back down to this point. Yeah, this is a re-entry zone. And I'm going to have a good buy here because this is a key level. And I expect price to come. I'll start a new storyline on a weekly here. You understand? I'll start a new storyline here, which is going to be like this. Something like this. And targeting this high. You know, we're targeting this high. So that's huge. So let's take off BBMA. Let's go on the daily. I spotted this on the daily time frame. So now, what are we looking at? Simple and basic. As I said, you want to look for a key level. You understand? Let's cut price so you don't get confused. Let's replay price. Let's say to this point. So what are we? I mean, we had a break of structure to the upside here, and now looking at this level from here, from this break of structure from here, because once and whenever we have a break of structure, we really have a swing. These are swing lows, are swing high, right, on a daily time frame. If you turn on your line chart, where are the key levels we have on top here? We have this key level. It's a V-shaped key level. Here's a V-shaped key level, another V-shaped key level. So now which of these key level is valid? This one is valid, this one is valid. You understand? But we don't want to start taking a trade from this daily time frame. It's risky. We want to see when price comes to any of this key level and we know what to do. So price have broken structure on the higher time frame. You understand? So we already know our bias is bullish. Are you getting the price have broken structure on the higher time frame? We already know our bias is bullish. So what are we expecting? We're looking for these key levels. We have this key level, this key level. And here's another key level too. This is an open close key level, which is also valid. Here's an open close key level too, which is also valid. So our insights here, we have nothing. So what are we expecting? We want to see price comes back. But using your layman knowledge, you see here we have a sweep. Here's a sweep. making this low strong and protected. This low is now becomes a strong low, and we have a minor break of structure inside here. So we have a sweep break of structure, meaning this low is protected. So price is actually going to have a turning point inside the zone. So let's see which key level price will actually respect. So we just watch price. Price came on the same daily time frame, just break this one. This key level, we mark an X. This key level, we mark an X. Nothing, no reaction. You understand? We are trying to play safe. Remember. So your price move. No panic. You don't need to panic whenever you want price to come to any of the key level you have marked out to react from any of them. So if it's reacting from here, you don't need to stress yourself. Just monitor. But this, that's why I said you will not always come and you will not experience all this. You will always come in the market and see when price is already there. You understand? You always whenever you come to market, you see price already where you want it to be. There's nothing like waiting. So what happened? Price came, tapped into this key level. We saw what happened. Price tapped into this key level, and this day finish here. We had price closed at this point. Price closed above our key level. What do? We start looking now for our lower time frame confirmation. That means this one is no longer valid. So we want to start the storyline. To start the storyline, we need some few confirmations. So let's see what happened. Price went up. Price was spiking. Spiked. So let's see. Let's go one time frame lower or two time frame lower. I told you what we are looking out for. We're looking for a break of structure. So where's the price tap? Price tapped at this point. And where is our break of structure on this 4 hour time frame? We had a break of structure here. At the break of structure here. That means again inside here, what do we have? Let me cut price again. It's like I've gone to.
Yeah. So I have a question.
Yes. You can ask a question.
Okay. Just go back on a 4 hours time frame.
On the H4. All
Yeah.
right. Yeah, I'm on the 4 hours right now. I'm on the 4 hour
Okay.
time frame.
Go back on a daily. On a daily.
On daily, yes, the daily time frame.
Okay. Now, price has give us a the first breakup structure to the downside and give us the second one to the downside. That's why the same question I was trying to ask, if which one should we consider?
Price have given a break of structure to the downside, to the upside or the
Yes.
downside.
I mean the first breakout.
This breakout to the downside here.
Yes.
These are
The
internal
first and
struct.
the second.
These are internal structures. You understand?
Yes, I was
These are internal structures. So we expect price to come, take out this external, this external, and take out this other external. You understand?
yeah,
That's what we expect.
what if price give us a two breakout on a 4 hours time frame?
To the downside or upside.
Yes,
To the downside.
to
If
the
price,
downside, to the downside.
or let's say for instance, price breaks this structure here, price breaks this is liquidity actually. So let's say for instance, let's use
Yes,
this one. If price breaks this our key level, this our daily key level, price breaks to the downside, for instance, like this. That's why I say everything here is both sided. Price breaks to the downside. Like, is this what you're trying to say? If
yes,
price comes breaks, then whatever where are you expecting to buy to sell from? You start your bias has already changed. You're expecting price to come back to its key level, tap, and you have a sell to the downside. Are you getting? Your bias
yes, I'm getting.
have automatically changed. For instance, let me draw a little diagram here. If you have this key level, for instance, like this, uh, if you have this key level, for instance, right? And now what are you
Yes,
expecting? We're expecting price to come down to this key level, tap, and we have a move to the upside. What's line for? So, and what happened? Price actually comes like this, breaks this low, where you're expecting your key level to, where you're expecting for your key level, price comes, break it. Let's say this way you're expecting your key level here, this V shape for a reversal. Once it has been broken, that's why we have this type of SNR. We have the flip zone SNR. You understand? It simply means they
yes,
call it SVR or RBS. You understand? This is a
yes,
support zone, and this one above is a resistance zone. So this one means support, turn resistance, and SDR. So what happens? Price will come back here, tap, and we have a sell. That happens mostly on GBP USD, mostly on GBP USD all the time. Where you expect price to come and reverse price comes tap and falls down. You get
I was only confused because I spotted this starting my storyline on a weekly time frame. So I spotted a classic scenario on a
yeah,
weekly time frame.
and it,
So I was looking for sales.
yes, and it got
I was
violated.
looking for Yeah, it got violated. So price came give us a breakout and didn't came back to the zone and mark out and still give us another internal breakout again.
No, whenever your key level has been violated, for instance, like this, whenever your key level has been violated, expect price to come back to that key level and you have a sell to the downside. So that's what I say, it's both sided. You are not expected to lose. You understand? You're not expected to
Okay.
lose. It's both sided. I hope that's clear. We can continue
All
now.
right, thank you.
So now, for instance, we had price come, this is our daily key level, right? Price came here, tap into this key level, and this is liquidity, this is internal range liquidity here. Internal range, this internal range liquidity means you can start buying from here, but that's not safe. We want to have a confirmation, a confirmed storyline. We get once we have a confirmed storyline. So price came tapped here. What are we expecting? A break of structure, one time frame lower or two time. If it's not clear on one time frame lower, that's when you should go two time frame lower. You understand? But to play safe, one time frame lower. So we had a break of structure. Yes, a break of structure. Sometimes if it's not clear here with the weeks, you can use your line chart. You have a break of structure here. And what are you seeing on a break of? We have a break of structure and a sweep. We have a sweep now. This SMC sliding in. We have a sweep of liquidity and we have a break of structure, making this guy a protected or a strong low, making this guy a protected low or a strong low. Why this is our daily key level can end here. We don't need it anymore. So this guy becomes a strong low. Why is it a strong? Because we have this sweep of liquidity here. It's called transactional liquidity. Transactional liquidity has been swept. We have the break of structure. Then what do we just looking at this? You can already see these are liquidity. If these are strong low, this should be liquidity because liquidity broke structure, then it's a valid liquidity pool here. Valid liquidity pool. Now we are on the higher time frame, that's 4 hours daily. Which POI should we choose? We have looking for POI should not be our problem. Turn on your line chart. You see, we have this V shape. Here's our V shape. V-shaped key level, you can mark out that V-shaped key level if it's closer to liquidity. So after your liquidity, any POI, any key level closer to, even if it's an open close, is valid. You understand? The closest key level closer to liquidity is valid. The closest key level, which is nearest to liquidity, is actually valid. So sometimes if you're confused, I told you guys, if you're confused on which POI to choose, you understand? If you're actually confused on which POI to choose, like you don't know which POI, like okay, let's say at this level, you don't know where to choose your POI. If your common sense doesn't tell you that use this V shape here, you understand? You don't know which one to choose as your POI. It's simple. Go to the higher time frame, one time frame higher, mark the nearest key level you have there. This one should be this. But I'm not sure price will come right to this level. But this is the nearest key level on the higher time frame. Can you see? The nearest V shape on the higher time frame. Turn on your line chart. We're running out of time. I need to pay for our Zoom again, so we have enough time. So this is our nearest V shape key level. Can you see nearest V shape key level on the higher time frame? It's easy. Go back to the lower time frame now. Since you've gotten your higher time frame key level. Where was it? I think this was it. This was our higher time frame key level. This one on a higher time frame. Now, what do? You refine. You refine this level. You refine it. You go more lower. You refine. From here to here, we have this V shape. You can tap here. It's all right because it's closer to liquidity. It's still valid. You may bring it down here. It's still closer to liquidity. You can choose to refine the zone down, bring it to this one line chart. You can bring it to this one. You can bring it to this one. You can bring it to this one. You understand? Refinement now is all on you. You can refine to a more stable one which you actually want. But for me, it's far more clearer here on this 4 hour time frame because this was my only SNR I could spot. You understand? So now what do? You can mark out your trade. can mark out to trade that should be here. And you're targeting this high. It's external range high for price to take it out. I think here that high. And your stop loss can normally with SMC supposed to be here, but this is just key level. You can put it exactly under this week. Exactly under the week. So that's providing us 1 is to 12 weeks reward. So let's see what actually happened. Price came, tapped into our key level, and you see boom to TP. Can you see the tap? Price came, tapped into our key level, boom, straight to TP. So if you could still use this key level from here from the daily, that's why if you start from the daily, you have to refine so you have the closest, best, last resort level you want. You understand? Closest last resort key level you want. So this is our trade here. So actually, since it's a storyline, we know price should be able to come right to this zone up here. But I'm not that sure. I'm not that sure. Let me see on the daily time frame for roadblocks, 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 roadblocks. This is a clear roadblock here. This one. The price haven't gotten to this point yet. Price haven't gotten to this other point yet. So these are zones where price might actually come back and want to start a new storyline from those zones. Understand? Price may actually want to go to those zones to start a new storyline. So let's see what happens. I think that's why I got this order. I got a buy from here. Was it this one? Let's see. Next buy was from this next buy now was just from here. From the 4 hour time frame, I didn't need to go higher again. I take this QMR. Can you see this QMR? I don't need to start a storyline anymore. You understand? I've already got to my storyline. I have my main direction I'm expecting. So if it fails, fine. You understand? We can't control the market. If it fails, fine. So this is what I'm expecting because I had this liquidity close to this one. I had liquidity close to this. And what happened? Price came tap into this level. And I didn't actually refine. I didn't refine. I just entered here. That's why price had to beat me out. Let's see if we were to refine. Yeah, we have entered. All right, this is how you refine. If you go one time frame lower, you see, okay, here's where price is actually this your H4 zone. You want to take it to the nearest, just like 5 pips. And take it back down to this SNR. This SNR, this V-shape SNR here. See we've gone down a little. You can still go down, you can still refine again, go down to 30 minutes or 15 minutes. You keep refining that zone to make it look small, much more precise. Bring it down again. Zone here. Okay, bring it down there. Let's go down to 15 minutes. 15 minutes there is okay. We have this open close. Closer, open close. So then we have this other open close here. So what did I tell you about open close? Let's say we choose to use open close here. To confirm an open close, go 1 time frame lower, 2 time frame lower. You want to see an SNR. Here we had an SNR on this open close. Can you see this is an SNR? A classic SNR. Turn your line chart, you're going to see this slight V shape here. That's a classic SNR. So what happened? Price came exactly to it and tap. So I haven't, as I said, I haven't confirmed this trade using TPO and all those stuff. So I can't really bank on it. I can't really bank on it yet. So basically, all what you have to do is storyline, study storyline, higher time frame, and everything. If you have any question, you can ask. We have just 4 minutes left.
Yes, boss.
All right.
Got a question. It has to do with the stop loss.
All right.
I'm
All
not
right.
sure how to set the stop loss. Like, how do
Okay.
you know how many peeps you're supposed to use for your stop loss?
All right. When it comes to setting a stop loss, I always set at least 10 pips stop loss. My stop loss is always at least 10 pips. You understand? Always at least 10 pips stop loss. But now, if you've understood SMC, I'll always mark out these zones whenever I'm trading. For instance, let's take an example on this previous trade here. Let me show you something. I always take an example on this previous trade here. For instance, this trade here, if I want to have my stop loss, what will I do? I'll go again lower. Once I've gotten this is my entry here, right? I'll go again lower, let's say 15 minutes, 5 minutes. I'll go again 15 minutes or 5 minutes. And I'll check for any other zone around this one, which should be this one. Can you see this other V shape here? The price can actually come back to this V shape. I'll mark out that V shape. Closer to my last resort entry, I'll mark it out. Where will my stop loss be? Below this last one. Can you see it's going to be below this last one? You get it's going to be below this last one. That's just how I always confirm when it comes to stop loss. I will always draw two lines like this. My stop loss is going to be below the last line. So let's see. Let me show you another example. I hope that's clear. I'll just go down to, let's say, if I have a trade on, if my last entry is, let's say, on 15 minutes, then I'll go down to like 5 minutes, which is that last zone. That last zone, I'll mark it out. Let's see this. This was a trade. You have break of strokes to the upside. Break of strokes to the upside. Liquidity price came back to this key level, tapped the key level. I think there was a storyline that began here. Let's replay price. The storyline began from here. Price tapped and closed above our key level. This was an open close key level. Can you see? And I think if you've watched the videos, you must have understood fresh and unfresh levels. So this is a fresh key level, even though it tapped into this one, this candlestick passed through it and it became fresh. So price came tapped into this fresh level, close above the fresh level. On a daily time frame, what do you do? 1 or 2 time frame lower. I'll show you how I have my stop loss again on this one. You can see on this one, I still have this line here. Can you see this? I still have this line here, which I put my stop loss below that line. So let's see how this played out. We had priced our first touch, and after that, we start looking for our break of structure. That was our first touch. If I use the line chart on this one, my first touch was somewhere around here. I always mark it out. For instance, I take this line to I place it on this my first touch here, the key level on the lower time frame, and I go to the left. Looking to my left, I have this zone here. I want this structure to be broken. You get once this structure have been broken, it break with a week, but it wasn't that valid. Price came break with the body, and now I'm expecting price to come back down here. So what do? I think I went more lower to refine, and while refining, I had this. We have this QMR. You understand? We had this QMR level here, and we had liquidity here. So what happened? This was my QMR level. This was my entry actually. Can you see? My entry was this QMR because I had liquidity here. My entry was this QMR. This Quasimodo reversal level here. And what happened? As I told you, I always look for that last resort level. That last resort level. I'll come again there. I'll draw a line at that last resort level and put my stop loss below that level. Because I don't want to come and put my stop loss below this week. You understand? That's very, very huge. My stop loss is here. I'll make